Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. The closure of 6 debt mutual fund schemes by Franklin Templeton yesterday has triggered a panic reaction in India's capital, finance and mutual fund markets. These sectors of India's finance and banking and investment were already sitting in a nervous mode, and now a panic has set in. That's what we are seeing in the bond markets also, which the RBI governor had been claiming very confidently that corporate bond markets are stable. They are not stable according to us. Mutual funds are in a hurry now to raise cash anyhow. They have been selling their prime assets, their prime investments in order to raise cash, in order to be prepared to meet the redemption pressures which are bound to swell up with each passing day. Thus, mutual funds are shoring up their cash reserves, hoping that they don't get into a default mode when the redemption pressure builds up higher and higher with each passing day. The reality is risk aversion has come into the market. There's a scare, there's a fear, and the fear is who is safe? Probably from an investor's perspective today, safety is being doubted for every mode of investment, and thus risk aversion is going up. The demand for redemptions is going up. At such a time, the cost of raising funds also shoots up. Because of this closure of schemes by Templeton, Vedanta, which had a AAA rated debt instrument, was able to raise funds at a rate of 11%, which is almost 2% more than what was expected. But then the funds were being raised at a time when panic has set in, and of course, the interest expectation of any investor or lender is bound to be much higher. In this scenario, the assets under management of mutual funds are also depleting and they are bound to go down further. It's worth looking into the details of those 6 debt mutual fund schemes of Franklin Templeton which were closed yesterday to understand how the contagion is going to probably spread further. These 6 debt fund schemes of Templeton which were closed yesterday are categorized as credit risk funds. They raise money from investors promising them higher returns, and the money that is raised by them from their investors is invested in debt interest bearing securities. But they do not invest in government bonds. They do not invest in AAA rated corporate bonds. They invest typically in those bonds which have a low credit rating, but because of that, they give a higher return on the investments that are made. Thus, typically, the investments made by these schemes are in A plus or A minus schemes. They don't get into the AAA category. They try to enhance the returns to their investors. But what is the enhancement of returns? Compared to any other debt fund, these credit risk funds of Templeton which have been closed at the most give a return which is 1.5 to 2% higher. We really don't think it is worth sacrificing safety for just such a paltry incremental rate of return. But that is what was happening. It is a high risk game. In these funds, typically, investment is made betting on the ability of the borrower to pay the money. Thus, they don't really go by their solvency in a big way. They see whether in the short run, the person or the corporate to whom they are giving money is going to be able to repay the money or not. And the risk factor is much higher. That explains why these funds had invested funds with the likes of the EDAC, the Anil Ambani, Reliance Group, DHFL, SL Group, etc. Those are the kind of investments they made, and that also shows why the money got stuck. It is interesting to note that the total funds raised by these kind of funds, which is credit risk funds by mutual funds in India, is just about 55,000 crores. And Templeton was a leader in it with more than 60% share in it. And all these funds have got closed. Investor money stuck certainly for an extremely uncertain period. And we really do not know how much of it will get returned. And why are we saying this? Let us examine 3 schemes out of these. All of them are on a similar footing, but we went through the portfolio of holdings of 3 of these funds, which is Franklin Low Duration Fund, Franklin Income Opportunity Fund and Franklin Credit Risk Fund. We looked into their portfolio and the investments that they made, the money they have lent is to a number of companies where we think the money is not going to be easy to come by. They have invested in companies which are quite unknown and their rating is just A or A plus. Not that credit rating is a big parameter to depend upon, but the common sense says that when these are companies which are completely unheard of, how did Franklin invest in them? Let me mention some of the companies. They have invested money, for example, in a company called 5-Star Business Finance. Ever heard of it? SK FinCorp. Ever heard of it? SL Infra Projects, which has gone in a default mode. OPJ Trading. Vistas Financial Services. Bisnath Wholesale Trading. Sadbhav Infrastructure Projects. Adarshini Real Estate. Ever heard of these companies? And many more such entities which we think are not worth investing in. But the reality is that the business model of these entities, that is these mutual fund schemes, was based on this. Invest in companies which have a low credit rating, but because of that, they give a higher return on the investment made by way of interest, such as to offer a better return to investors. Templeton has been a leader in this entity as we discussed, and it has been continuing this investment business for many years. It did not even default in these entities, these mutual fund schemes in 2008 when there was a financial crisis, but this one has been different. It has been raising questions on, okay, you can have a model which is based on investing in these kind of entities which have a low credit rating, but that doesn't mean you can go reckless. That doesn't mean you build such a pathetic portfolio of investments such that a default looks imminent. To us, a number of these investments look very questionable, and we think that some kind of an investigation is warranted. The fact is that the going looked good for Templeton all these years, and it had built a niche segment for itself in this kind of mutual fund business. But then COVID and the continued lockdown made the cookie crumble. The larger picture, according to us, is that there is going to be some kind of a contagion effect which will catch momentum. Defaults are going to be imminent in sector after sector. We are seeing defaults happening, for example, in what are called low ticket retail loans given by NBFCs in particular. In fact, today's newspapers reported that lenders are not even able to trace the borrowers of these loans. There's going to be default in microfinance companies, which typically lend to small traders, daily wage earners, and those kind of craftsmen and entrepreneurs. They are going to default again. Borrowers in respect of two-wheelers and three-wheeler loans are imminently going to default. Credit card portfolios again look risky. NBFCs are already witnessing a big strain in their MSME portfolios. And along with that, other mutual funds are also going to face a stress in their business. Thus, according to us, Templeton is a starting point of another segment of defaults, and it is going to spread all across. A pandemic spreads everywhere, and a pandemic spreads no one. And that is what we are going to perhaps witness in India's banking, finance, and capital sectors. We hope it doesn't wipe out industries completely, and we do hope that the government comes up with some measures which are yet to be announced in order to minimize the impact of this pandemic. This is Akhilesh Bhargava signing off till we meet again. Namaskar.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, well, subscribe to our YouTube channel.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.